Before we analyze the charts on MicroVision's move up, then down, let's recap some of the reasons for the moves. So I made a video about MicroVision a couple of days ago. There was no news on the run-up, with the exception of better than expected earnings. But the main catalyst for the run-up, which saw the stock almost rise 200% before the recent pullback, was due to a short squeeze. So there was about 48 million shares of MicroVision sold short with a value of 135 million. That was equivalent to the short interest as a percentage of the float being roughly 30%. So that's a lot. So what did ownership do? Rightfully so, in the public markets. They were going to sell new shares. Why not take advantage of the ramp up in price? So they were going to raise roughly $75 million in the public markets through the stock market, thanks to the short squeeze. Now, typically when you sell more shares, typically that's followed by a decline in stock, because you're diluting the earnings per share. So that day, Wednesday, the stock sold off, and then that evening they said, oh wait, we changed our mind. So MicroVision announced on Wednesday evening that it was canceling its plans for a new stock offering. With the threat of significant stock dilution now removed, investors are pouring back into the stock. So in the news, the stock rose. Rather than risk continued valuation declines, it seems the machine vision specialists will pursue other fundraising avenues. So this was a silly move. They didn't take advantage of the opportunity they had in the stock market and take advantage of the short squeeze by selling shares. They said they're going to pursue other fundraising avenues. If they don't know, it's tough out there getting loans. So, with interest rates at 5%, debt maturities, assets underwater because of the interest rates rise. We had a couple of banks collapse. We have commercial bank loans decreasing. I'm not sure how they're going to raise additional capital. So this was silly because Microsoft is still recording very little revenue and posting substantial losses. Last quarter, the company recorded just 800,000 in sales and posted a net loss of 19 million. So that 70+ million in revenue or in cash that they could have raised could have helped fund their operations moving forward, because they only have 67 million in cash thus far. So they're going to have to raise funding quickly in order to continue covering its operating losses. So it was a opportunity to win, and they turned it into a loss, right? Because short squeezes don't last forever. That's usually followed by a decline in price. So whether they went through it or not, cashing in on the public markets, stock would have most likely declined. Now let's go to the charts. And we'll just start with the monthly chart. We can see most recent high at $8. I'm going to say this is where we had monthly buyers. And why did I pick that level? Well, that was the origin of the huge move higher to the tune of $28. Let's mark it in. 150, let's say. So price did dip its toes in the zone, but the zone is still valid. Typically, if you penetrate the zone less than 50%, it makes the zone still valid. All right, let's go down to the weekly chart. This was the origin of the move leg higher on earnings. They were still bad, but better than anticipated. So the question is, how far are we going to pull back? Let's go to, let's see if this works here. Okay. So using Fibonacci retracements, we already are and most likely will breach the 50% retracement. We are approaching or bouncing off of the 61.8% retracement. Wall Street's secret fib retracement is the 88.6. It works a lot and it's not very known. So that's what I'm looking at. Pretty much a 100% move back down to the origin of the move higher, which would be a good opportunity also to load up potentially. Let's go down to the daily chart, and you can see right now we are red for the day. This is an area where I anticipate price at least pausing, but the price structure does not make it a level of interest. Really, the volume kicked in early June. Again, although the origin was after earnings on May 10th. So I'm looking for further declines. Now we do have the 200-day moving average roughly at $3. We have the 100-day moving average moving higher at $3 as well. So let's see if price can get down to the $3 level, which would be near the 88.6% retracement, which would be near the monthly buyers level at 150. So if you, depending on where you got in, trade your plan, follow your financial objectives, pay attention to your risk tolerance. But I'm looking for further declines in MicroVision. Thanks for watching. Subscribe. Please like the video.